This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set to edge lower as investors hold their breath for Nvidia's results, seeking fresh signs on whether the AI frenzy still has room to run. More earnings in focus with Fortescue's full-year profit missing estimates. A big day ahead for China and Meituan. BYD and banks also reporting. Plus, a Bloomberg scoop. Seven & I seeking protection from the Japanese government, raising a hurdle for the buyout bid from Canada's Couche-Tard.
Heidi, we're on countdown for Nvidia's results. The $3 trillion market cap company really expected to beat consensus. But of course, really, it's all about the potential volatility that this earnings results could cause for the broader markets. We're talking about Nvidia taking up about a third of the gains that we saw this year for the Nasdaq 100. In terms of market cap on the S&P 500, is about 6% in terms of the weighting. So we are expecting potentially a raise in profit guidance. Some analysts expecting big numbers from this company, but of course the bar is really high, and it's just all about whether that investment in AI will pay off, and we'll get more indications from Salesforce too.
Yeah, exactly. So it is that big question as to, how much further upside can we get from this Nvidia-led rally, right? But that broader question when it comes to AI spending, as you mentioned, those Salesforce results are really key and front and center for that as well, particularly when it comes to these software stocks and the spending that we've seen on artificial intelligence. Shares for Salesforce, we saw that slump last quarter after guiding to slower growth. Software stocks more broadly have been underperforming other tech sectors so far in 2024. So while we kind of still see spending when it comes to chips and servers remaining robust, the picture has been very, very different when it comes to capex for companies that offer AI features and services. So that lag that we've seen has been far behind other areas of the tech sector. There's a lot of growing impatience as to when, faster growth, improved efficiencies is actually going to materialize and play out for the bottom line, Shery.
Yeah, especially against those chip stocks, gains of more than 20% this year. When it comes to the Nasdaq 100, gains of more than 10%. So take a look at how futures are coming online right now. We're seeing a little bit of downside. Of course, we had marginally higher gains for the S&P 500 and broader stocks across the U.S., but it was really that focus on Nvidia and where we go from here that's really matter to markets right now. And given that we do have Salesforce, given that we have Nvidia also coming up, it's not surprising if some investors do stay on the sidelines. But it's really about where the Fed goes from here as well. We had some gains in Treasury yields. We did have a positive response to two-year note sales from the Treasury. We are watching the 10-year yield around the 380 level. But take a look at how Asian stocks are setting up, because we had the dollar also fluctuating between gains and losses. On the other side of the trade, we had the Japanese yen seeing a little bit of weakness overnight. We had gains on the Nikkei in the previous session. Right now, we're pointing to some downside with futures down 0.4%. We're also watching Sydney futures. Of course, we've had some strong gains when it comes to the Aussie dollar, given also the strength in iron ore prices, but futures down about 0.4%, Heidi.
Our next guest remains committed to Nvidia, though, Shery, and has already taken some profit when it comes to the stock. Elfreda Jonker is a client portfolio manager and investment specialist at Alphinity Investment Management. Really great to have you with us. So is it just sort of taking some of the froth off at this point? What are the risks when it comes to these ever higher expectations on this one stock?
Yeah, so I think if you look at Nvidia, it's clear, as you've mentioned, it's accounted for a third of the Nasdaq returns this year. It's a $3 trillion company, and it has consistently surprised expectations by 20% over the last year. So every quarter, there's so much pressure because it's become a little bit of an ecosystem stock by itself. So we expect this company to continue to grow their revenues, but probably not come through with that 20% surprise anymore. So we would be happy if we see something with a 3 in front of it for this quarter's revenue, so 30 billion plus. And then the key thing really is about, one, the guidance going forward and what they're expecting on revenues, if they can give us something specific, and margins, of course. And then more importantly, it's about the supply chain. There's a lot of concern that the Blackwell has had some supply disruptions. So we don't think it's a major issue. We think there's enough demand for the Hopper and the rest of the chips to sort of fill in the backlog initially. And what we're hoping to hear from them is just how they are managing on the supply side, how long the sort of potential disruptions is, and when they expect to be fully sort of engaged again with the market, that they can start fulfill all those sort of upfront demand that's already sort of been placed up to the end of 2025. All those products have already been spoken for effectively.
What would you hear that would potentially raise alarm bells for you, particularly in light of how much this has lifted the broader market?
Yes, I think any major disruptions to that supply chain, if they're going to come out and say that it will take much longer than expected to come through with their new products. The other thing that Nvidia has consistently been able to do is to ensure that they're getting a lot of new products out. And this time around, it's all about innovation. If we hear anything about innovation not necessarily keeping up with what some of the peers are doing, which is really not what we expect, but those sort of expectations could definitely hamper, I think, the excitement around Nvidia and what it means for the broader economy and particularly for the AI trade.
With rate cuts right now seemingly locked in for September from the Fed, are you more interested in cyclicals at this point, or what sectors are you still cautious about if we do get a hard landing?
Yes, so our base case is probably not for a hard landing, and I think it's probably more towards the softer landing outlook. But there are certain sectors that we're still pretty cautious on. I think the latest results season was very clear, particularly if you look at the industrials, for example. Some of those end markets remain really weak, sort of the auto sector, agriculture, even I would say some of the sort of broader commodities. Anything to do with that's very dependent on China demand for us is still sectors that we definitely don't want to go into. And then also parts of the consumer side. Yes, there's been pockets that's been really strong, but if you look at certain areas like travel, Airbnb, for example, coming through with disappointment, luxury stocks really still struggling. So those are areas that we are still very cautious on. And just given what we have seen over the last few months is an increase in volatility and an increase in uncertainty. Yes, we all expect the Fed to start cutting now, so it's all about how far and how deep they will cut and how fast. But the concerns are still out there around increased geopolitical risks and so forth, and of course also the US elections. So we have been adding to sort of more of the defensive exposure over the last few months. Companies like Coca-Cola, Merck, we've also added to Costco. So we do have sort of a balanced approach going into the rest of the year. So we have our core growth companies that we continue to like. We have some cyclical exposure, and then also defensives of late.
You mentioned those geopolitical tensions, and of course we've seen some downward earnings revisions in the energy sector as well. How do you assess that space?
Yes, so currently we've actually reduced all our exposure out of the energy sector. Yes, there's definitely some reasons for the energy price to remain pretty high if you think about the geopolitical risks. But for us, it's all about the earnings and what they can generate. And if you look at the last reporting season, energy was probably the sector with the worst earnings revisions of all. And that sort of leaves us on the sidelines for the moment. So that's not a space we are currently chasing, but we all know as the economy starts to lift off again, cyclicals will benefit, and that's one of the key sectors that always rise when you get there. But for now, growth is still relatively soft, and it's not a space where we are hurrying into at the moment.
Just taking a look at your sort of defensives over the past few months, what does that, I guess, tell you about your expectations for the economy for households, right? At the moment, you know, obviously some clarity being given to the Fed's path forward, but there's still a bit of a debate as to whether we're in for a soft landing, maybe a soft landing with a soft recession. How do you sort of view that?
So I think if you look at the consumer confidence numbers that you've just sort of highlighted there, that's actually up a lot. And I think it's because 75% of households in the US actually have a mortgage rate below 5%. And that's probably why you haven't really seen a lot happening in the US housing cycle. But it has given consumers a lot more money to spend on other things. For us at the moment, it's really just an environment where we would prefer to stay in the more staple side rather than the pure discretionary side. So something like a Costco or a Coca-Cola are fantastic companies where we feel there's sort of underlying demand, very strong brands. They've changed a lot of their underlying business dynamics, particularly Coca-Cola has done quite a few things throughout COVID, and we think the market's underestimating some of those strategic changes. So we're happy to stick with those sort of companies for the moment, and we are doing a lot of work on the sidelines to see when and how the time comes to be ready to pounce on some of those more discretionary names.
Elfreda, always great to chat with you. We appreciate your time today. Elfreda Jonker, who's a client portfolio manager and investment specialist at Alphinity Investment Management. You can catch our exclusive interview with the Nvidia CEO, Jensen Huang, after those results. He joins Ed Ludlow for Bloomberg Technology's special coverage of Nvidia on August 28 in the US, or 6:30 a.m. if you're watching out of Hong Kong on Thursday.
And Haidi, there's a new development in the takeover battle brewing between the owners of Circle K and 7-Eleven. Bloomberg has learned that 7&I is attempting to get Japanese government oversight of Couche-Tard's bid, which could derail plans for the country's biggest foreign takeover. Our chief North Asia correspondent, Stephen Engel, has more on this. And Steve, so 7&I wants to be treated as a company in these critical security risk areas such as aerospace, nuclear energy, and rare earths.
Rare earths. Yeah, that's the interesting part of this. I mean, obviously, you know, when this news of the deal, which Couche-Tard of Canada has described as being a friendly, non-binding offer, there hasn't been a lot said by either side, other than, of course, 7&I has appointed an independent board of outside directors to kind of assess this bid. But this is giving us, if what the sources are saying is true, kind of a window into the thinking of 7&I that perhaps Ryuichi Isaka, the president and CEO, and the board are sort of lacing up their boxing gloves for a potential fight with the backing, they hope, of the Japanese government. That's where it would be very interesting if the Japanese government sort of comes to their aid in what could be a protracted fight. We'll have to see. Basically, 7&I, according to the sources, is seeking core status for its company from the Japanese government under the Foreign Exchange and Foreign Trade Act. That would be an upgrade from non-core designation under the law. That would mean, if they get granted that, the Ministry of Finance of Japan would have to vet any entity that is seeking to buy at least a 10% stake in another company that is designated as core. So that's why this is a core consideration, obviously, for 7&I if they want to rebuff this bid. Because you're absolutely right, Shery. I mean, core companies, that designation is usually in areas, sectors that have national security implications. You mentioned that. Anything to do with the military, rare earths, nuclear power, and the like. Are convenience stores in that same category? Well, that's the big argument. And the thing that, according to the sources, that 7&I is arguing is that they provide essential services, food and supplies, essentially with a 21,000 plus stores all across Japan, open 24 hours a day. They provide these services and essentials at a time of natural disasters. They also do official document services. You know, you can get official documents through 7&I. They also have banking services and the like. It is these services and these stores you're seeing here are ubiquitous across Japan. But is it a core business? We'll have to see whether, of course, the Japanese government designates that.
And this is something of a litmus test for the Japanese government, right? Because they have taken protectionist positions in the past. So much of the sort of, market exuberance on Japan this time around are expectations of a more open regulatory environment.
Well, yeah, this is another very interesting. That's why we're really fascinated with this story, because, again, you know, the backside of this as well is that Value Act Capital, an activist investor, has been fighting for a long time to get Isaka and the board to basically unlock shareholder value for the core business of 7&I. 7&I is 7-Eleven and the merger with Ito Yokodo, their department store that has been underperforming, and they've already, in April said that they're going to look for a potential separate listing. So they are listening, but they have not acquiesced to the demands necessarily of a total split up of this company that Value Act Capital has called for. But that the base of this is, Couche-Tard has 9 times more enterprise value per store, and it's a much smaller company, but it has a much bigger market cap than Seven & I. So again, shareholders might say this offer from Couche-Tard makes a lot of sense. But again, will there be protectionist sentiment coming from Japan? Because in 2008, concerns over power supply and nuclear energy led Japan, for example, to block the London-based Children's Investment Fund from buying stakes in J-Power. So you're absolutely right, Heidi. There have been instances of protectionist behavior on the part of regulators in Japan. But they also have new corporate guidelines in Japan aimed at injecting more vigor into corporate Japan through improved governance and protections for investors. So that's why we're going to have to really look at this very closely to see what side the government takes on this.
Our Chief North Asia correspondent Stephen Engel there joining us with the latest on all of the twists and turns on the Seven & I saga, which, of course, we'll continue to watch. Coming up on the Asia Trade, U.S.-China relations in focus as National Security Advisor Jake Sullivan visits Beijing. We'll also get more of the market outlook with Invesco as traders await Nvidia's earnings and find out how AI is impacting the world's call center capital as outsourcing companies in the Philippines turn to bots. We have plenty more ahead. This is Bloomberg.
Well, Fortescue's full-year profit rose 3%. That's the fourth largest iron ore miner weathered a slowdown in Chinese demand. Bloomberg intelligence analyst Mohsen Crofts is with us now. So we're also sort of comparing to what we saw from BHP yesterday, right? Fortescue has always maintained that its high-quality product kind of is almost relatively immune to a lot of the economic woes of China. Is that still the case?
Well, the result that they had for FY24 was pretty strong. I mean, they, in terms of their realised price, $103 and 3% rise in profit to $5.5 billion. But we think potentially that's as good as it gets in terms of their price realisation, at least for the next couple of years. We are seeing, as we've talked about, downturns in the demand picture from China. And while there's an opportunity for a slight increase in output over the next couple of years, the margins are pretty certain to be lower.
I know you were looking at sort of obviously the forecast, capex and the broader outlook, and as well as Fortescue sort of wanting to do a whole lot of other stuff other than its core iron ore business too. Yeah,
so the capex is going to be a challenge for Fortescue. So their dividend was $1.97 in FY24, up 12.6%. So pretty decent dividend result, but 70% payout ratio. The next year is going to be more challenging. So we talked about the lower price realisation likely to occur, lower prices, but they're looking at a capex increase for FY25 to 3.7 to 4.3, up from 2.9, so pretty big increase, and a big part of that's coming from their decarbonisation initiatives. That's going to rise to about 700 to 900 million from just 224 in FY24. They are also going to be spending quite a bit more on their green energy business, which is 300 up to 500. So while we do see potential for those to reduce costs in the long term, for investors that are relying on a dividend in the medium term, it's certainly going to be a challenge for their free cash flow.
Yeah, I thought they paused their green hydrogen plans. Did we get any more clarity on those ambitions?
Still fairly short on the details. We are hoping to get some more information and insights from the earnings call this morning. But it seems that for the rest of the green energy business, things are standing ahead, as we saw from those capex numbers. So hopefully we do over the next couple of reporting cycles get a bit more details on some of the, I guess, projected earnings figures for the green energy business as it continues to be a use of cash.
Bloomberg intelligence analyst Mohsen Croft there with the latest on Fortescue. We will be speaking a little bit later on with the Fortescue CEO, Dino Otranto, and the Lynas CEO, Amanda Lacaze, about their latest earnings reports. Well, BHP is looking to boost returns from its copper portfolio to help offset declining returns from iron ore as Chinese demand cools. Speaking with Bloomberg earlier on, CEO Mike Henry told me that he's highlighting really the near-term impact of China's uneven recovery in commodity markets.
BHP is a long-term company, and you can see coming through our results this time around this consistent year-in, year-out focus on operational excellence, and that's delivering industry-leading returns for the capital that we have deployed in the business. And we've revealed more this time to shareholders about the growth outlook for copper, which is an attractive commodity long-term. As the global population continues to grow, we see further urbanization, and the decarbonization thematic plays out. Now, in the very near term, what are we seeing by way of economic growth? The overall global picture is one of 3% growth for the next couple of years, similar to last year. We are seeing some momentum build in a number of the major economies globally, and of course India is set to remain the fastest growing major economy. In China, a bit of a mixed picture. We're seeing strong growth in a number of segments that are important for commodity demand in China, and that includes automobiles, machinery, infrastructure, shipbuilding. But the property sector itself, which makes up about 20% of steel demand, that is weak. It's been weak for some time. We've seen lower or fairly low levels of both sales and new starts. But the Chinese government is enacting policies that are intended to address that, and that includes relaxing some of the constraints on property purchases. There's a government program underway to mop up some of the excess inventory, and we expect those to start to have effect through 2025. All of that paints a picture of us remaining of the view that China is going to be able to hit its 5% growth target for the year, assuming that the policies that they're enacting get carried through. Now, for iron ore, what does that mean? Another billion-ton plus year of steel demand, reasonably healthy iron ore demand, albeit under a little bit of pressure currently. And BHP is very well positioned in this market, given that we're the lowest cost supplier. We've stretched the lead on the cost front yet again this year, and we're achieving better pricing outcomes than the competition. So certainly well set, even for a bit of short-term weakness in the market. And at a portfolio level, the company is really well positioned for the future.
Do you see further production cuts as being inevitable in China? Because we did see losses for Chinese steel mills deepening again in the last month. And does that impact, your forecast in terms of demand going forward? Do you think we've hit a bottom for steel mills in China?
Yeah, so what we've said is that we think steel demand is plateauing, or is plateaued around 1 billion tons plus. And of course, there's going to be a bit of variability within the tens of millions of tons in and around that. And that longer term, we do expect that steel demand, just like as the pattern that's played out in all major economies as they've developed, that over time, once an economy moves past its steel-intensive early development phase, it will become less steel-intensive, and we'll see a contraction in steel demand.
BHP CEO Mike Henry there. We have more ahead on the Asia trade. This is Bloomberg. U.S. futures looking like this. It's all about Nvidia's earnings coming up. We're also watching 7 & I at the open in Japan. ADRs rose more than 2%, is now seeking government protection after being approached by Couche-Tard. This is Bloomberg. President Biden's top national security aide, Jake Sullivan, has met with Chinese Foreign Minister Wang in Beijing. China has said it will raise Washington's tariffs, export controls, and sanctions during his visit. And Sullivan is expected to broach issues including Beijing's support for Russia and territorial disputes in the South China Sea. Let's bring in Susan Shirk, research professor at UC San Diego School of Global Policy and Strategy. She previously served as the U.S. Deputy Assistant Secretary of State in the Bureau of East Asia and the Pacific. Always great talking to you. I mean, we are seeing some communications between the two sides, but given that the political season in the U.S. is also heating up, where can we feasibly expect this relationship to go?
Well, I think expectations on both sides are pretty low because of the election and the uncertainty about it's going to be a very tight race. But this is an opportunity for Xi Jinping and the Chinese government to try to lay the groundwork for some possible improvement in relations in the next administration, if they were wise enough to do that. 4 years ago, when the Biden administration was coming in, China lost a chance to reassure the United States about its intentions through its actions, and instead pick fights with India, Australia, Japan, South Korea. And as a result, the Biden administration's positions hardened and really were not significantly different from Trump administration policy. So it's an opportunity for the Chinese side were they to choose to take advantage of it.
At the same time, hasn't China's stance also hardened since then? I mean, we are seeing them being more assertive. We just heard that a Chinese military aircraft entered Japanese airspace. I mean, this is unprecedented. It's not been taken lightly by the Japanese government. We know that a Chinese vessel also collided with a Philippine vessel over the weekend. I mean, what sort of behaviors can we expect from Beijing until the elections in the U.S. and just in the next few months?
Well, it's really hard to say because we can think about what would actually be in China's own interests, and then we can speculate about what's in Xi Jinping's mind. So it's really difficult to predict. It would, as I just mentioned, be in China's own interests to try to moderate its policies at this time and to reassure the United States and its neighbors about its intentions. But if it goes the other direction by overreaching, which is, you know, the name of my book is Overreach, because this is self-defeating behavior on China's part.
How much risk do you assign to? We know some of the rhetoric that we've heard from the former president, Donald Trump, saying that what he would do about potentially US support of Ukraine if he was to take the presidency again. Do you think that extension to what US support for Taiwan would look like is a logical one? Is that a risk that Taipei should be worried about?
Well, I don't think it's quid pro quo. But I do think that the Chinese side doesn't really understand how Ukraine and the Russian invasion of Ukraine is what the Chinese would call a core interest for the United States and for the Europeans. This really matters a lot. And China's recent assistance to the military-industrial complex in Russia, even though it's not selling military equipment per se to Russia, is something that has really alienated the United States and especially the Europeans. So China will end up paying a price for that. It's already paying a price in terms of trade sanctions from the Europeans. So it is pretty self-defeating behavior. And it's controversial inside China, too. Not everyone in China thinks it's a good thing for Xi Jinping to stand arm in arm with Putin as he engages in this unprovoked war in the Ukraine.
We're also seeing this week Kurt Campbell, the Deputy Secretary of State, headed to the Pacific Islands Forum. This is obviously a part of the world that has kind of been to the periphery of foreign policy for Washington. Mm-hmm. Should it come further to the fore now? Because we've seen Beijing make, so many overtures in that part of the world, and the US has obviously had some missteps in that part of the world.
Well, the United States is paying more attention to the South Pacific. And it is also starting to pay more attention to Africa, where the Chinese actually have done very well in building strong economic and political ties. So there definitely is a kind of geopolitical and geoeconomic competition underway that extends throughout the entire globe. And it's not easy for the Chinese. They're constrained too. They recently, especially due to their domestic economic problems, they are fiscally constrained. They don't have enough money to do everything they want to do. They have to make choices as well.
Susan, it's interesting looking at all the different ways that the geopolitical rivalry can play out, right? And this kind of great competition of our time between Washington and Beijing. When you take a look at the various options, there's obviously trade, there's new sectors like electric vehicles and solar. How much do you pay attention to the risk when it comes to the bifurcation in tech and AI and chips in particular?
Well, I'm very concerned about that. I don't think it's a good thing for the United States. I believe that the unique strength of the United States really lies in its openness, and that if we impose more and more tech sanctions on China and decouple from China in our technological and scientific collaboration and in our trade sanctions, that the world will cleave into two exclusive economic and technological blocks. I don't think the United States does very well under those circumstances. I think it's, it would be actually self-destructive for the United States to do that. For one thing, we want to continue to attract the most talented people from around the world to the United States to contribute to innovation in the United States. So the competition for talent should be intense, and the way the United States attracts talent is by being more open in its tech policy.
Right. Doesn't that, though, also allow for vulnerabilities? I mean, we continue to hear about hackings performed by Chinese-backed hackers breaching U.S. internet firms, the latest coming from Lumen Technologies. How well prepared is the U.S. when it comes to protecting its critical infrastructure against such hackings?
Well, I certainly believe that the United States should invest heavily in infrastructure protection, but a lot of that protection can be built in technologically into our own equipment, our own software. Just as we do with the internet. So the other way of trying to protect ourselves is by erecting barriers, sanctions that we impose on China. And in my view, in the end, that will never be airtight. It won't be completely effective, and it will be quite counterproductive to America's ability to innovate.
Susan Shirk, good to have you with us. Research professor at UC San Diego, as we continue to monitor Jake Sullivan's trip to China. And another story that we're tracking today, the U.S. Special Counsel investigating Donald Trump is pressing ahead with prosecuting the former president on charges of trying to overturn the 2020 election. Special Counsel Jack Smith has updated his indictment after the Supreme Court ruled Trump was at least partially immune from prosecution related to his official acts as president. The Republican nominee says the new indictment is ridiculous and should be dismissed immediately. You can watch us live and see our past interviews on our interactive TV function, TV Go. You can also dive into any of the securities or Bloomberg functions that we talk about and become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg.
The shares of Meituan will be focused at the open in Hong Kong. The Chinese food delivery giant is due to report earnings as we also wait for numbers out of BYD as well. So Belle is here with more. So starting off with Meituan, what are we expecting?
Well, we're still expecting sales growth, but what's interesting is I think we've seen that real trend in China for trading down. You're trying to look for cheaper alternatives, and that's actually going to be something that ends up weighing on Meituan's numbers, or at least slowing down the pace of sales growth that we're seeing. So it's been a period when you take a look at some of those in the grocery or the food space, Starbucks, Din Tai Fung, both of those have seen weaker sales numbers in China. They're not really budget offerings, of course, but Meituan, being a food delivery service, of course, has a range of different price points. But the more interesting one to note is going to be the low-cost group-based delivery system, Pin Hao Fan. So to give an example of how Pin Hao Fan works in practice, say you want a bubble tea, for instance, it's usually 15 or 16 yuan. You might go on the app, place the order, and then wait and see actually if someone else in your area wants that same bubble tea. So then the delivery man can deliver both at the same time to the same area. So that bubble tea that was, say, 15 or 16 yuan goes down to around 5 or 6 yuan. It's really extreme discounts that are on offer. And this service, Pin Hao Fan, could have been really what helped with the core commerce revenue jump for Meituan in the period. Overall, we're expecting 17% growth on the year. And also, of course, waiting for any details where we hear more about the share buyback program as well.
And Annabelle, of course, we've been watching the EV space as well very closely, geopolitical issues at play as well, not to mention that that's been a very saturated market in recent years. But BYD might be actually performing pretty well.
Yeah, well, when you take a look at the quarterly sales figures, or the figures that we've seen for sales over the April to June period, actually it's been a record, and so that sets us up for quite strong earnings later, especially when you consider that there's been really strong exports, and those attract high prices as well. So Bloomberg Intelligence is actually expecting or forecasting a 25% jump in net income over the period to 8.5 billion yuan. But yes, that focus, because part of the reason that's really driving Chinese car makers to expand abroad is that market saturation, slowing EV sales domestically, at the same time that it's really catching the eye of regulators overseas. And the EU, of course, we know is really pushing ahead with those higher tariffs on Chinese-made EVs. And so we're going to be watching for any sort of update. What is BYD thinking about its overseas strategy, especially in the light of the EU, but also the US and Canada looking to impose higher duties as well.
Our tech reporter Annabelle Druller's there with the latest on those Chinese earnings. And staying with EVs, it's really interesting that we've been talking about that potential slowdown when it comes to that market. Well, a new report from BloombergNEF now says that EV adoption in Southeast Asia, though, is accelerating, with electric vehicles making up more than half of all sales by 2040. BNEF's head of Asia Pacific, Ali Izadi, joins us now from Bangkok for more on this. And Ali, I mean, we're talking about that slowdown in Europe, in the North American market. So what's different with Southeast Asia?
In short, it's more models at more affordable prices offered by Chinese automakers in the region. So last year, we saw a tripling of electric vehicle sales across Southeast Asia. And if you look at those models, 7 out of the top 10 best-selling models were offered by Chinese automakers. The only other automakers that had a little bit of an impact on the market were Vietnam's own VinFast, which is so far limited to sales in Vietnam, and then to a lesser extent Hyundai Motor Group and Tesla, which have had a little bit wider range impact across the region.
What's the outlook then?
As you mentioned in your opening, we do expect that sales in the region will continue to rise. So across the region, the share of passenger vehicle sales having electric drivetrains last year accounted for 6%. We expect that 6% to increase to 8% by 2025, and then almost double by 2030 to about 15%, and then by 2040 under our economic transition scenario, which doesn't consider introduction of any new policy measures. Rather, it's driven by technology cost outlooks. In that scenario, we're expecting that the share of sales in 2040 would be 56% across the entire region. In absolute volume terms, we expect that eventually, by sort of the second half of 2030s, Indonesia would surpass Thailand, which is currently the largest market in the region.
And the issue, though, Ali, every time we talk about electric vehicles and new adoption, is just the infrastructure, right? I mean, are you going to be driving this car and then running out of battery? So tell us about some of the challenges that could hamper growth in this new market.
Indeed. So if you look back at last year, last year across the region, of the 154,000 passenger electric vehicles that were sold, more than half was sold in Thailand. And the reason for that is Thailand enjoys both a fairly good set of policy measures, both on the supply side and the demand side, but also one of the best public charging infrastructure networks in the region. And in terms of affordability, particularly in urban areas, consumers have a little bit of a higher income levels compared to some of the other parts of the region. On the other hand, if you look at, for example, in Philippines last year, passenger EV sales there barely registered. Going forward, it also will be very much dependent on, in addition to government support, for example, for infrastructure development, how the competition among automakers evolves. Consumers in Thailand have been significant beneficiaries of heavy discounted by Chinese automakers. In particular, BYD has been discounting models to grab market share. How long this continues and how incumbent automakers, particularly Japanese automakers that dominate the passenger vehicle market in the region, respond will also be critical. If we see, for example, other automakers also try to compete by then offering more models at more affordable prices, then certainly sales could further be boosted as well.
BloombergNEF's head of Asia Pacific, Ali Izadi, there with us with that latest report. More ahead on the Asia trade. This is Bloomberg. The latest on the corporate front, Goldman Sachs Commodities Trading Co-head Qin Xiao is leaving the firm just months after taking on the leadership role. According to an internal memo, Xiao plans to leave at the end of this year after 22 years at the company. Xiao was one of the few Goldman partners in that unit who stayed on after the business cratered in 2017 and was rebuilt in the following years. Supermicro shares closed lower in the US after Hindenburg Research disclosed a short position in the AI server maker. The short seller also accused the firm of accounting red flags and alleged sanctions and export control failures. A spokesperson for Supermicro says the company does not comment on what it calls rumors and speculation. NFL owners have voted to allow private equity firms to buy as much as 10% stakes in their franchises, loosening some of the tightest ownership rules in professional sport. Deals are expected to happen quickly, with firms including Actos Partners, Ares Management and others already vetted and approved. Stakes could sell for as much as $1 billion. Bloomberg has learned that Country Garden is considering further delaying payments on some of its yuan bonds. Sources say its main onshore unit may push back payments due in September by 6 months in an effort to gain more time to map out a debt overhaul. The potential delays would be a fresh setback for onshore bondholders who are waiting to recoup some of their losses. Shery.
Haidi, at the open in Japan, I'll be very much watching how 7&I, the stock, trades because, of course, we saw ADR is gaining more than 2% overnight. We're getting indications that the management of 7&I is getting ready for a fight. They want notification from the government of any purchase of its shares above 10%. Remember, they were approached by Couche-Tard last week. But, Haidi, I mean, I gotta say, you're only notified if you're designed as a core company. And in order to do that, you need to be part of the critical national security sectors such as aerospace, nuclear energy, and rare earth. So this really raising some eyebrows, isn't it?
Yeah, I mean, we were sort of joking about it earlier, right? I mean, obviously, 7-Eleven and 7&I have a pretty wide a plethora of different businesses, including, financials and banking. But clearly, when you think about the core 7-Eleven business, the egg sandwiches, the ready-to-go onigiri, I don't know if that's sort of a national security or national importance level that we're talking about. Lots of big questions for the broader market too, right? Because as we've been talking about, there have been instances in the past where the Japanese government government has stepped in and taken what could be seen as protectionist measures in favour of these Japanese companies. And I do wonder whether investors are going to have that negative reaction, because part of this big reacceleration of the Japan growth story, the Japan equity rally story, has been this idea that, you know, corporate governance, structural change, the openness of the regulatory environment has really come to the fore, Shery.
I gotta say, in 2011, during the March 11th earthquake and tsunami, when all of the foods just like flew off the shelves at these 7-Elevens, that was very critical, I gotta say, very, very important during natural disasters, but we'll see how the government reacts to this request, right? And as you said, it really speaks to the broader, more corporate governance issues here in Japan. But take a look at how markets are setting up for the opens, because we have seen that incredible rally in Japanese equity markets because of that optimism of changes coming in the space. But we are seeing right now, at least for today, a little bit of downside in the future space, down 0.3%. We saw the Nikkei gaining a little bit of ground in the previous session, given that the Japanese yen also weakened a little bit against the U.S. dollar. Of course, we are fluctuating between gains and losses. It's all about where the Fed goes from here. But it's also countdown to Nvidia, not to mention Salesforce, for more indication of where AI investment is headed and whether that can actually translate to sales growth. Sydney futures at the moment also down 0.4%. We had a little bit of upside for the Aussie dollar, given the strength of iron ore. We're in the thick of earnings season in Australia as well. U.S. futures really not doing much. We were slightly higher in the overnight session. I mean, near all-time highs, right? But it's really all about Nvidia, Haidi, when it comes to those earnings results.
Yeah, and really the question of how much further can it lift all tech boats, if you will. And we do have that big interview coming up on Bloomberg. You can catch that exclusive conversation with the CEO, Jensen Huang, after Nvidia reports those results. He'll be joining Ed Ludlow for Bloomberg Technology's special coverage of Nvidia on August 28th in the US, or 6:30 a.m. if you're watching in Hong Kong on Thursday. Our conversation with the Fortescue CEO, Dino Otranto, also coming up a little bit later.
This is the Asia Trade. We're counting down to Asia's major market opens, and that countdown to Nvidia's results, some have called it the most important stock on the planet right now. And of course, we have Salesforce as well. So, Heidi, we're going to get an indication of where those AI investments, how they're translating into actual sales.
Yes, and how much they can continue to lift this broader market, right? But it's interesting, you mentioned Salesforce, that sort of software component of the AI trade has just lagged so badly this year, and whether we're going to see that continuation and the kind of investor frustration being expressed, right, when it comes to when these efficiencies will actually start to materialize. But of course, a big story we're watching in your side of town is really what happens when it comes to the 7&I deal.
Yeah, take a look at how Nikkei futures are opening right now, because you said it is all about 7&I at this point. We saw ADRs gaining more than 2% in the overnight session, but we're now hearing from sources that they're seeking protections. They want to be alerted by the government if anybody buys more than 10% of their stock, after, of course, being approached by Couche-Tard last week, and really giving us an indication that perhaps they're really gearing up for that fight. The Topix is down about 0.2% at the open. Of course, we had a little bit of gains on the Nikkei in the previous session, given that the Japanese yen was weakening a little bit against the U.S. dollar overnight. We're seeing it at that 144 level. But the big one that we'll be watching this week as well, Tokyo CPI numbers for some indication of where inflation is going, where the BOJ is going from here. We're still waiting for 7&I to start trading. But take a look at how Korea is coming online as well, because we had declines for the Kospi, decline for the Korean won against the U.S. dollar. We had Korean bonds, though, gaining ground as well, because we had the government budget and some debt sales announcement coming up that were bigger than expected. So we'll continue to watch where Korean markets go from here. But the won is strengthening a little bit against the greenback, Heidi.
Take a look at how we're tracking when it comes to the start of the staggered session here in Australia. Of course, in the thick of earnings season, we had Fortescue numbers. That's really one to watch today as we continue, along with BHP, to see kind of relative resilience when it comes to these iron ore majors in the face of China's potentially now structural slowdown. But some of the commentary, as we hear from the Fortescue CEO a little bit later on, will be key in terms of what they talk about in terms of ongoing China demand, given the pretty dire situation with steel mills over there. We're also watching the Aussie dollar is holding pretty steady at this point at 67.89, and of course watching for some of these key sort of inflation gauges potentially as we have the dollar just taking a bit of a pause as we get towards those month-end flows data as well. Treasuries are also holding a little bit steady at this point as it feels like we are seeing this market holding a collective breath for Nvidia, Shery.
Yeah, also holding their breath for 7&9 to start trading in the Japanese session. Still untraded, set to fall at the open. But let's bring in David Chao, global market strategist at Invesco. And David, great to have you with us. The reason that we're watching 7&9 very closely is because we have seen this incredible rally in the Japanese market predicated on the fact that we're seeing more openness, more open regulations, more corporate governance being strengthened here in the markets. And yet we're hearing that 7&9 may be seeking some protections here from what could potentially be the largest foreign takeover of a Japanese company. How will this set the tone for foreign investors that are watching this market and are thinking of putting their money here in Japan?
Sure. I wouldn't say that one company is going to very much impact the overall market sentiment or throw a wrench into the government's structural reforms to improve corporate governance within the market. Certainly just one example. But I think that ultimately what's more important are the economic fundamentals for Japan, which are improving. I think that certainly will be what will drive the Japanese market up in the second half of this year.
Does a strengthening Japanese yen sort of complicate where equities go from here, though?
I think that's a misperception that that the Japanese yen strengthening would pour cold water on Japanese equities. So far, that certainly has led to a bit of a headwind. But I think that what's more important is that the economy is improving, that monetary policy is normalizing, and I think that these are good things for the economy and for stocks. I think that there's still a bit of upside for Japanese equities.
We're seeing 7&9 shares now falling more than 3% at the open. Of course, we have heard that they're seeking government protection. Sources saying that they want the Japanese government to require prior notification of any purchase of its shares, about 10%. David, you talked about the fundamentals of this market. What more gives you conviction that this market that has for a long time been thought as being undervalued versus global peers could go from here? Is there more room to run?
I think the big crux of the Japanese market is domestic consumption. It's been very weak because real wages have been impacted by elevated levels of inflation. So now wage growth is catching up, and we're starting to see domestic consumption also pick back up. This is a very key part in the Japanese economy. We know that exports have been quite strong. Tourism, inbound tourism has also been quite robust. The missing link is domestic consumption, and that's starting to really ramp up.
We have to talk about Nvidia, right? Because this is potentially the world's most influential stock, and I'm not sure there are even real sort of historic parallels. I suppose you could look at something like Cisco, but does it worry you that so much market sentiment is sort of locked up with this one company? And how much further do you think that broader, lifting of all boats, certainly within tech, can continue with Nvidia?
Well, I think that we saw a bit of dispersion earlier away from Nvidia and away from the Mag 7. I think that was a healthy development. The stock market broadening out is our argument heading into the Fed rate cut. We think that small and mid-cap stocks should benefit from that. But certainly that volatility that we saw at the beginning of this month, a lot of that capital has poured right back into AI-related stocks. I think that the AI theme continues to be the dominant theme heading into the next year or two. It continues to be a very strong place for investors to put their capital. I think that, especially with company earnings have continued to upside estimates, it continues to be a very bright spot for investors.
Are you sort of interested in looking at any China opportunities at the moment? The sort of thesis that you have is potentially policymakers will have a bit more room to move and flexibility around fiscal stimulus as a result of a stronger yuan. Do you see any reason to have that exposure to China at the moment?
I think looking at China now makes sense given valuations. I think what really needs to happen there is for investors to see a few sequential months or even quarters of economic improvement, either coming from the monthly data points, especially looking at consumption, and also whether we get more supportive measures from the property market. I know that this is somewhat of an unloved asset at this time, which I think could also bring opportunities.
You expect 2 rate cuts from the Fed. Do you think that there's quite a level of uncertainty in terms of what the magnitude and scope of that Fed easing goes from here? And do you subscribe to still the soft landing scenario, or do you think that there might be recessionary sort of conditions building around that?
I think the biggest risk to the market right now is whether the U.S. economy hits kind of a rougher or a hard landing. That, you know, data points that are coming out continue to be kind of mixed, both from the labor data, which is perhaps a little weaker than expected, which I think actually is pushing Fed, forcing their hand to move perhaps a little more quicker than what markets would have expected earlier. Although we only expect 2 rate cuts of 25 basis points before the end of this year, there are expectations that the Fed could move more aggressively. That's very much dependent, I think, on the labor data, the employment data, and also on the inflation data. Make no mistake that the disinflationary process in the U.S. is very much underway. Now all attention is very much focused on whether the Fed is behind the curve in preventing kind of a recession or a hard landing from happening. I think that they've been able to thread the needle so far, and we continue to expect a 25 basis point cut in the coming few weeks.
So where do the recessionary risks and the fact that the Fed is obviously going to cut rates this year, where does that put small caps and cyclicals? I mean, we saw some semblance of a comeback for these smaller sectors, but really nothing that's sustainable so far.
Sure. I think that we're moving between a contractionary and a recovery phase of the business cycle. And we've kind of moved back and forth over the past 12 months. But I think that when the Fed cuts its first policy rate, then it's very clear that we are moving into the recovery part of the economic cycle. And historically, small and mid-cap stocks have done well during this recovery period.
David Chao, global market strategist at Invesco, there with his market outlook as we continue to see some of these big movers in the early market session here across Asia. Take a look at 79 because we're seeing losses of almost 3%. Of course, we have heard from sources that it's seeking government protection. It wants the Japanese government to require prior notification of any purchase of its shares above 10%. Couche-Tard approached the company just last week, and it now wants to be designated as a core company, which would include companies in critical national security sectors such as aerospace, nuclear energy, and rare earths. Haidi, we're seeing that downside of almost 3%.
Yeah, such a fascinating story and such a litmus test for the corporate Japan, right? We're watching that very closely. Also watching some of the big miners, of course, as we are really in the thick of earnings season here in Australia. Fortescue, alongside, of course, what we saw from BHP yesterday, seeing a shrugging off of that China downturn, right? Profit edging up. They remain committed to net zero emissions by 2030. Some issues, though, when it comes to the green hydrogen push, but the full-year profit rising 3% for the world's 4th biggest iron ore miner. So still quite a bit of resilience performance there, and you can see that being reflected in the share price. Linus is another one. We'll be speaking to their CEO a little bit later as well. Net income for the full year beat analyst estimates, but a little bit weaker in trading today. This is an Australian rare earth miner. Also watching some of the sort of more inflation-sensitive names as we look forward to price data from Australia a little bit later on as well. Woolworths, the supermarket conglomerate, up by just about 1%, and watching some of the other mining players there as well. You don't want to miss out our conversation with the Fortescue CEO, Dino Otranto, as well as Alina CEO, Amanda Lacaze, about some of those latest numbers, that exposure to China and their outlooks, and another big conversation coming up on Bloomberg. You can catch our exclusive interview with the Nvidia CEO, Jensen Huang, after their results. Bloomberg Technology's special coverage of Nvidia is on August 28th in the US, or 6:30 in the morning if you're watching out of Hong Kong. On Thursday, of course. More ahead on the Asia trade. This is Bloomberg.
Take a look at how 7&I is trading early in the Japanese session. We're talking about losses of about 2%, at one point falling as much as 3.8% at the open. This, of course, after we heard from sources that it's seeking government protection. It wants the government to require notification of any purchase of its shares, about 10%. This after Couche-Tard approached the company last week. But, of course, what it would take for the government to be able to do that is interesting. Our chief North Asia correspondent, Stephen Engel, has more on this. Let's talk a little bit about this core designation that they would need to get.
Yes, core designation would essentially be granted by the Japanese government. That would indicate that they would need to, essentially, the Ministry of Finance would have to vet any takeover offer of at least 10% or higher. But a core designation, the argument has to be made that it's an essential national security company, essentially, because right now core companies are in areas like national defense, in rare earths, in nuclear power, and the things like that. So my question to you, Shery, sort of rhetorically, is: are convenience stores, the Konbini in Japan, are they on that level? Well, according to sources, they're arguing that they provide services. They provide services that are necessary during, say, for example, a natural disaster, daily foods, and also government services and the like. So. You wanted to add something there? Steve, how often do you go to the Konbini?
I was telling Haidi earlier in the show that really that made a big difference during the March 11th, 2011 earthquake and tsunami, because, all of these critical, products like toilet paper, ramen, water were flying off the shelves. And yes, 7-Eleven is very important in providing those supplies. But Haidi, I'm not quite sure what that would mean for the Japanese government if you take it to that level where it's actually designated as core, alongside, as we said, companies in nuclear energy, rare earths, and just national security risk companies.
Yeah, our egg sandwiches and onigiri, as good as they are, is it in that category, Steve, right?
I lived in Japan for 3 years and lived on tamago sando, the egg sandwiches, obviously. But that doesn't mean necessarily that it pays my light bill or provides electricity to my home in times of disaster. But that's going to be the interesting question going forward, because it looks as though this signals, this move, if it's true, and we haven't gotten a comment yet from 7&I, if this is true, this shows their wariness, essentially, towards this deal. And that, again, you're seeing the stock going down. I mean, shareholders, including the activist investors like Value Act Capital, Value Act Partners, they've wanted to unlock more shareholder value. They've wanted to basically break up the 7&I, 7-Eleven and Ito Yokodo, the department store, underperforming. And 7&I has indicated that they're going to seek independent listing for Ito Yokodo. But again, their enterprise value per store, and they have 85,000 stores around the world, including 21,500 in Japan, making it the ubiquitous one-stop shop for Japan, whether it's on daily necessities or during natural disasters. Their enterprise value of Couche-Tard is 9 times that of the much larger 7&I. So investors are kind of going, hey, we do need more shareholder value. But again, there have been protectionist efforts by the Japanese government in years past. But there are new corporate governance rules that are supposed to reinvigorate the Japanese corporate environment, provide more transparency, and also more rights for individual investors and the like. So we'll have to see whether the move to get government backing and get that core designation, which would require vetting by the government of any takeover offer, whether that helps the company. Obviously, it's going to help the company fend off the potential takeover bid, but is it going to add any shareholder value? And is it going to go back to the old ways of corporate Japan and protecting these companies from foreign takeovers? So it's an ongoing saga. This is the latest development, and we'll have to see, because we're not getting comments from either side at this point.
Chief North Asia correspondent Stephen Angle there in Hong Kong with the latest, and some great analysis on that story. Of course, we'll continue to watch these developments on the Asia trade. Much more ahead. This is Bloomberg. Well, President Biden's National Security Advisor Jake Sullivan has met with the Chinese Foreign Minister Wang in Beijing in the latest effort to use dialogue to manage the rivalry between the two largest economies. Our China correspondent Min Min Lo joins us now from Hong Kong. So, Min Min, the deliverables and expectations are always very low going into these things. What do we know, particularly in light of how close we're getting to the US election?
Yeah, we don't actually have a lot of information about that closed-door meeting. There was a very short readout from Chinese state media, Xinhua, Wang Yi, saying that, China-US relations have had a lot of twists and turns. He hoped that relations will get back to a stable track, and Sullivan said that competition shouldn't veer into conflict. So nothing very new that we haven't heard of before. And bear in mind that this is Sullivan's first trip to Beijing as the top national security aide. But he had met with Wang Yi at least 5 times in the last 1.5 years. And some of these were clandestine meetings that were only revealed to media after the fact. And he has been at the center of an important back-channel communication to diffuse tensions during times of intense tension. He was key to diffusing tension after the spy balloon incident, and also key to laying path to the Xi-Biden meeting at the end of last year. So this time, there is also some speculation about whether Sullivan's trip is going to lay the path for a final Xi-Biden summit, because remember that President Biden is now one of the only U.S. presidents in decades who have not visited Beijing during his time in office. So there are still a couple of opportunities for them to meet. If Biden doesn't go to Beijing, they could meet in Brazil during the G20 summit, or in November in Peru during the APEC summit. But look, as you said, it's just a couple of months away from the U.S. elections, and the objective here is not exactly to look for breakthroughs, but to ensure the forward momentum of the stable relations carries forwards to the next administration, to ensure that there won't be any crises that would brew up over the last few months of the Biden administration, because that will set the tone for U.S.-China ties under the next administration.
So he has still a few more meetings in Beijing. What are the issues on his agenda right now?
Yeah, so for Sullivan, we understand that Washington wants to deepen military-to-military communication, especially down to the theater command level, because Washington views that as important to avert any crisis and flashpoints like the Taiwan Strait, for instance. And the U.S. also wants China to take more actions to prevent the development of chemicals that could go into the makings of fentanyl, which is the leading cause of drug overdose in the U.S. Sullivan will likely also want to get China's assessment of the situation in the Middle East. Of course, both U.S. and China have very different approaches to the conflicts there, but they have a shared concern around stability in the region. And of course, the Ukraine war, an important concern of the U.S. Sullivan likely to put more pressure on Beijing to reduce the sort of indirect support that it's been providing to Russia when it comes to, selling those dual-use equipment to Russia, for instance. And on China China's part, Taiwan will be the top focus. It is the red line of China, the foundation of U.S.-China relations, and China has been very angered by what they see as repeated provocations by the U.S. to increase military backing to Taiwan, for instance. And of course, all those very intractable issues when it comes to the economy, the tariffs on hundreds of billions of dollars worth of goods, the investment restrictions, the prevention of these high-tech transfers, especially when it comes to AI tech, semiconductors, equipment. These are things that China will likely raise, but it's also an area where we're not likely to see a lot of compromises.
Bloomberg China correspondent Min Min Lo there. Now, the U.S. Special Counsel investigating Donald Trump also pressing ahead with prosecuting the former president on charges of trying to overturn the 2020 election. Special Counsel Jack Smith has updated his indictment after the Supreme Court ruled Trump was at least partially immune from prosecution related to his official acts as president. The Republican nominee says the new indictment is ridiculous and should be dismissed immediately. Early in the Japanese session, we continue to keep our eyes on 7&I. It's holding is seeking government protections. According to sources, it wants the government to require notification of any purchase of its shares above 10%. This, of course, after Couche-Tard approached it with a $38 billion deal. We know that in order to get this, it would have to be designated as a core company. And Haidi, of course, only firms in critical national security sectors such as aerospace, nuclear energy, and rare earths get that core designation.
It's such a great story, so interesting, right? We love the 7-Eleven offerings, but not sure if they fall into the same category as the aforementioned. But Shery, take a look at some of the earnings sort of related stocks that we're watching in the Australian session. The likes of Fortescue, of course, the world's fourth largest iron ore miner, really essentially for a long time being that iron ore pure player, but now sort of diversifying into a bunch of other things. But still, when it comes to iron ore, pretty resilient. We saw that pretty sort of comfortable beat on expectations there and really shrugging off kind of the concerns over the broader China slowdown, right? Much like what we heard from BHP in the previous day. Linus Rare Earths also seeing a bit of upside now, as we did see that was a beat as well. And we're also watching Woolworths Group. Those numbers came in quite favourable. We're also getting, of course, some of those sort of expectations being shaped up across Aussie bond markets as we get into the Australian CPI numbers that come out later on today, and whether that kind of gives the 10-year rally a little bit more gas. We certainly see perhaps those yields look a little bit overextended beyond 4% there, so we could be needing quite a low print from those inflation numbers. Perseus Mining there, also one of the outperformers, up by about 5%. The dividend forecast rose almost 30%, more than 30%, I should say, according to our modelling. This is for the Australian gold miner. And this is a picture across benchmarks as we're sort of half an hour into the start of trade here in Asia. More ahead, though, on the Asia trade. This is Bloomberg.
Take a look at how chip stocks across Asia are trading at the moment. A little bit of a mixed picture, but this, of course, as we await Nvidia's reports. Very important given that we've had a sort of a disappointing season so far for the Magnificent Seven, and given that Nvidia accounts for more than a third of the NASDAQ 100's gains this year. We're talking about a rally of more than 160% in 2024. And in fact, from 2022, 1,000% gain for Nvidia with a market cap of more than $3 trillion. So when such a big stock moves, it could really lead to some volatility. And right now, though, we might be seeing the calm before an Nvidia-induced storm that we could see around this time tomorrow, perhaps, for a sense of how dull things have been. Let's bring in our China Show co-anchor and chief markets editor, David Ingles, who's been crunching some numbers. Dave.
Extremely, extremely dull. In fact, we're calling it the dull and the lull before the Nvidia storm. And, you know, we have some numbers to actually back that headline up. So number one, Exhibit 1, let's put it that way. Exhibit 1, turnover on the S&P 500. On average, year to date, we do about 85, 86, 87 billion US dollars. Last night's or overnight Tuesday session was under 61, which was the second lowest turnover on the S&P 500 all year. So that's exhibit number one. And I would imagine that's probably what we also get similar, if nothing changes between now and, of course, ahead of the Wednesday session. Although, while it's quiet in the cash markets, it's worth pointing out that when you look at options, for example, it's really downside protection. It's hedging in the event we do get losses ahead after the company comes out with earnings. So in fact, the 5 most popular, or the 5 options that expire tomorrow on the S&P 500 with the highest open interest are all puts. They're all bearish options at these levels. And I guess it goes to show what market sentiment is like, almost agnostic to what the results look like. It's a high bar, even if they outperform. Certainly that's where the betting markets suggest that downside protection is the way to go. And I'll end on this, and certainly we've been showing this all week. 10% is the implied one-day move in shares, either direction of Nvidia, after the company reports results tomorrow. So again, I'd perhaps just end with this message that, if this is any indication, guys, that the Wednesday session will be like the Tuesday and the Monday session, I suggest just take the day off, go for a walk. If you've been putting out, if you've been delaying getting your wisdom tooth, we'll do that on Wednesday. Just make sure to head back to the office, to your desk, by the close in New York on Wednesday. Get a cup of coffee, get an extra one, call people you love, and then brace for the storm this time tomorrow. Back to you guys.
David Inglis. It's never dull with you, even if the markets are dull. It's never a lull with our David Inglis, who's, of course, the China show co-anchor. You can tune in after our show if you want a bit more dullness going into those Nvidia numbers. But not dull will be the big interviews that we have coming up. That exclusive conversation with the Nvidia CEO, Jensen Huang, will be with us. After those results, we'll be joining Ed Ludlow for our Bloomberg Technology special coverage of Nvidia. That's on August 28th in the US, or 6:30 a.m. on Hong Kong time, that is, if you're watching in Thursday. Speaking of earnings and tech, shares of Meituan will be in focus at the open in Hong Kong. The Chinese food delivery giant is due to report earnings as we also wait for numbers out of the auto giant, BYD. So Belle's here to go through all of this. So what are we expecting from Meituan given the nature of where the economy is at the moment?
Yeah, that's really been one of the key themes to come out of earnings, just broad spectrum, has been the Chinese economic weakness story and how that's showing up. And it has been that tendency for Chinese consumers to trade down and find cheaper alternatives. And actually, when you take a look at Meituan, which of course being a food delivery and other delivery app, has a range of different price points, but what really could have driven growth is its Pinhao Fan unit or business offering. So Pinhao Fan, just to give an example here, it essentially lets you group orders together, and it's a low-cost delivery system. So say, for instance, you're looking to buy a bubble tea that's usually 15 or 16 yuan. You go on the app, you place the order, someone else in the similar area to you wants the same bubble tea. That means the restaurant can, or the cafe can prepare the 2 teas at once. The delivery person can take them to a similar location. As a result, you, the end consumer, can buy it for a cheaper price. So you're talking about something that's usually 15 or 16 yuan, sold as cheap as around 5 or 6 yuan on the app. So it's a huge price discount. And this Pinhao Fan is expected to have really driven core commerce growth. We're expecting broadly that to have risen 17% on the year. Also waiting for any sort of details around international expansion plans. We saw Meituan making its debut in Hong Kong about a year ago. How's that Cheetah app been performing so far? And any details as well on the share buyback program, because share buybacks, again, another major theme for Chinese tech companies this reporting season.
Belle, what are we expecting from BYD?
BYD actually could have posted, or were likely to post, some pretty strong numbers, because we've had those sales figures coming through for the April to June period, and they hit a quarterly record high. We saw a lot of shipments, outbound shipments, so exports, those attract a higher price tag. These are all positive factors. As our Bloomberg intelligence team is saying, we're likely to see around a 25% jump on net income over the period to 8.5 billion yuan. This has been a period, though, where there's been a really greater scrutiny coming from a lot of different governments worldwide, particularly the bloc, the EU, because we've seen them really pushing ahead with their proposal to slap further duties or levies on Chinese-made EVs, and BYD is one of those caught up in that. So we're looking to see how that affects BYD's overseas expansion strategy. You've also got further duties being applied in the US, Canada as well. Mexico, for instance, that could be a new sales channel. That's what our Bloomberg intelligence team has also highlighted. But they're just some of the themes we're watching as well out of these numbers due later today. today.
Our tech reporter Annabelle Drewler is there. Some of the other stories that we're also watching on the corporate front. JD.com has announced plans to buy back as much as $5 billion of shares by August 2027. It is a move to appease investors that are worried about a potential worsening Chinese consumer downturn. The plan comes a week after Walmart said it had sold its stake in the e-commerce firm, stoking concerns about the outlook. Anta Sports says it will buy back shares as it looks to support a slump in its stock hit by China's consumption downturn. The Chinese sportswear maker will use up to $1.3 billion of its cash reserves to buy up its stock in batches over the next year and a half. The plan comes after Anta posted better than expected profit for the first half of the year. Bloomberg has learned that Country Garden is considering further delaying payments on some of its yuan bonds. Sources say its main onshore unit may push back payments due in September by 6 months to gain more time to map out a debt overhaul. The potential delays would be a fresh setback for onshore bondholders waiting to recoup part of those losses. More ahead on the Asia trade. This is Bloomberg.
Call centers in the Philippines are starting to embrace artificial intelligence in the move expected to put hundreds of thousands of workers out of jobs. Bloomberg tech reporter Annabelle Drewler takes us through the BPO industry's rapid transition and what it might mean for white-collar workers worldwide.
It's a vital part of the Philippine economy. Business process outsourcing, or BPO, accounts for 1.7 million jobs and makes up about 8% of GDP. However, that could soon change as major BPO players introduce AI tools.
Some of these processes that are more human-led today will be a mixture of human plus machine-led, in the years to come.
Consulting firm Avascent says up to 300,000 contact centre roles could vanish within 5 years in the Philippines as a result of AI technology. Mylene Caballona is the head of a labour association representing BPO staff and has already seen changes.
Switching to AI has been, displaced workers. There's one company who basically just removed their entire line of business because they switched to AI. And that's like 300 workers affected, and it's going to continue.
It's not all doom and gloom, with the possibility that new jobs will be created instead.
You will need a lot of AI trainers, you will need quality assurance on these AI models, you will need auditing on some of these AI models, you will need fine-tuning on these AI models. And agents that are already in the workforce, they have an opportunity now to upskill themselves and play some of these roles.
Mylene Caballona, though, says many more are set to be displaced, a shift that will continue beyond the nation's borders.
One software can support like 300, then that's 300 workers that's going to be out of job. The risk is not just to the workers in the Philippines, it's workers all over the world.
Annabelle Drewler, Bloomberg News.
Let's bring in Jack Madrid, who's the President and CEO at the IT and Business Process Association of the Philippines. This is the country's trade association, I should say, for the broader sector. Really great to have you with us, Jack, and we appreciate your time. So I guess, first off, I'm interested if you can give us sort of an overview of where you're seeing a pretty consistent application of AI already across these businesses and where it's making a meaningful difference for efficiencies and for service.
Many of our member organizations have been implementing AI trials and use cases. And the results to date have been pretty much positive. Most have seen productivity and efficiency gains over and above 14% in the past 2 years. And we are hopeful that more and more of our workforce and our industry begin to view AI as augmenting the agent rather than displacing them. Obviously, there will be certain tasks that will be affected, those that are automatable, involving routine and monotonous work types. But these will also be replaced, by new emerging work types, wherein AI can be integrated and make and act like a technology co-worker beside the agent.
At almost 10% of the overall Philippines economy, the stakes couldn't be higher, right? Do you think you've scaled back the existential threat of AI, or do you think that is still the widespread concern?
You know, we view AI as both a challenge and an opportunity. You know, we have implemented AI tools in the past decade. Although generative AI is quite possibly a more transformative, game-changing tool. I think there is a window of opportunity where we could right skill and cross skill the existing workforce as well as the new job seekers to adapt their skills to the new work types. And, this is a welcome challenge given that we as an industry have always welcomed value-added services because one key metric that we look out for is revenue per employee rather than just total number of jobs.
Jack, so tell us a little bit about the broader trend that you're seeing in the BPO industry in the Philippines, especially just aside from AI and after the COVID-19 pandemic and the work from home situations that we've seen being more widespread.
Well, that's a great question. The pandemic accelerated the trend towards countryside development. Before COVID, only 25% of our workforce was outside Manila, but today we are at 32% of a larger workforce. We see this trend continuing through 2028, where as much as 40% of our workforce will be outside Metro Manila and centers like Cebu.
We almost lost you there. Really interesting how we're talking about work from home situations and we're still facing those challenges of connectivity. But when it comes to really the workforce in the Philippines, tell us a little bit about what you're seeing, perhaps in labor conditions and whether or not these changes that you've talked about could improve the situation for some of your workers.
Well, remote work and work flexibility has been vital in our growth and in actually being able to expand the diversity and array of global services that our agents provide to our global customers. Our industry has matured, diversified into many distinct verticals, and one of the faster growing ones include banking, financial services, and healthcare. And everyone, if you speak about remote work, everyone has a different ratio, I guess. But certainly the future of work is already here, and that future is hybrid and it's all about flexibility. This has allowed, our investors and locators to expand their choice of employees that they hire, given that many of our workforce are not able to go to the office every day, and so that flexibility really has expanded the ability to tap more unique talent pools around the country.
Does that also increase the competition out there? When you talk about choice and when you talk about tapping different talent, does that mean that the Philippines also needs to, compete with the likes of, for example, the Indian workforce?
India and the Philippines are a solid number one and number two if you look at volume in our space, and we're okay with that. But there are emerging IT BPM destinations that form the third layer. But what the Philippines offers is the youngest population in Asia. The average age is 25.3. And, with over 700,000 university graduates annually, we do have the demographic advantage. And so the challenge and the opportunity is really towards the skilling that is needed to adapt to the new work types moving forward.
Jack Madrid, good to have you with us. He's the president and CEO at IBPAP in the Philippines, and subscribers can actually read more on today's Big Take on the terminal. NI Big Take is your function, or listen to our Big Take Asia podcast. New episodes drop every Wednesday on iHeartRadio, Apple Podcasts, and Spotify as well. But right now we have breaking news. We are hearing that HSBC's incoming CEO, George Elderberry, is considering plans that could remove layers of middle management at Europe's largest bank. It would mirror similar moves that we've already seen from Citigroup and Standard Chartered. Now, as part of the deliberations, HSBC could cut the number of country heads operating across its worldwide network, and this according to people speaking to Bloomberg, Haidi. So we're going to continue watching really the changes that might be happening with the incoming CEO at HSBC.
That's right. Let's get some more details now from our Bloomberg finance editor, Adam Haig. So, Adam, what do we know in terms of what we're expecting?
Well, of course, the big caveat at this point is that, he's still not in the job officially. He doesn't start until September. So these plans may well still change. And I think it's worth bearing that in mind. But essentially, this is quite an early gambit to kind of show the extent of his cost-cutting plans, and I think removing that layer of middle management, be that kind of country head CEOs in some of their smaller regional offices, would of course go some way to do that. So that's kind of the basis of what we know at the moment. And indeed, as Shery said, we have seen this with some other banks in terms of the way that they're trying to tackle the global cost issue by removing some layers of management, taking out certain roles that have kind of become less effective as the bank's grown over time, and just have a real rethink about the way that the bank's structured as he gets his feet under the table. So it's early days. These plans could still change, but at face value, what we do know from our reporting in both Hong Kong and London is that these do look like quite significant changes to the way that HSBC will look as a global operation. It
was quite an unexpected change in leadership, and obviously under Noel Quinn, that sort of pivot to Asia was already underway, lots of stripping away of jobs and the such. Do we expect that sort of strategy to deepen? We know that the new CEO speaks Mandarin, for example.
Indeed, and that's been well flagged, well kind of telegraphed in that he has that kind of sense of the importance of Asia, of course, and the centrality of that to the business. But I think in a way, Haidi, it's a little bit too early to tell. Still doesn't officially start until the 2nd of September. And it's a lot of this early work is thinking about how the business will look for the years ahead, and positioning it, of course, at a time that global banks are really trying to bring costs under control. We know that the economy is looking a little bit fragile around the world, not just in the US. And as we go into next year, this positioning is going to be quite clear. And if they can get it right early, it can certainly save them some harder work further down the line.
With so much of this restructuring, does HSBC, particularly when it comes to units like investment banking, does it kind of end up looking more like its competitors?
It may well do, right? It may well kind of move it a little bit more into that kind of a direction. As we've seen, obviously, with James Fraser's big efforts in recent months at Citigroup, it's really going after those businesses that they're particularly strong on and where they have a competitive advantage. So there clearly is some of that going on as well, and just the need to remain nimble and incredibly competitive as the appetite from investors to rein in your cost base is only seems to go up as every week goes by.
Bloomberg finance editor Adam Haig with that story on HSBC. More ahead on the Asia trade. This is Bloomberg.
The countdown to Nvidia continues, and this is how chip stocks across Asia are trading right now. We are expecting, of course, those results, and given that the company has taken up about a third of the Nasdaq 100's gains this year, and also disappointing season for the Magnificent Seven, it's really all about how Nvidia, this chip giant, comes out with its results. We are also expecting Salesforce to report earnings as well, and that will really give us an indication of how AI investments are really translating to business. We're also watching here in the Japanese session 7&I, because we're getting indications now that the company may not be too happy about being approached by Couche-Tard last week. We are hearing from sources that it's seeking government protections. It wants to become a core company, such as the likes of others in critical national security sectors, and get notified of any purchase of its shares above 10%. And Haidi, we're seeing the downside of more than 1% at the moment.
Such an interesting story, but Shery, I'm watching some of the miners when it comes to the Australian session. Fortescue, that sort of resilience coming through in its share price at the moment, as we did see again, just that shrugging off of that weakness that a lot of these miners are seeing, but perhaps not quite feeling to the extent in China. We saw that theme with BHP as well. Lynas Rare Earths, the Australian miner, also up by 1.6%. We did see sort of some upside there when it comes to net income beating estimates. Woolworths also rising on that earnings beat. We're also looking ahead in terms of the gains in Aussie bonds ahead of that monthly CPI, which is expected to have slowed to 3.4%. Much more to come. This is Bloomberg.